Welcome to my trading room, and today I'll be taking you through module 8 where I'll talk about the the fair value gaps and the other blocks. So we'll be getting started, so I won't take so much time. Yeah. Now, these ICT reviews, and I want to review strategies that you can use. We have AMD, we have fair value gaps, and we have other blocks. So we'll be starting with the AMD. Okay, starting with the fair value gap first. Now, the fair value gap is a description of an activity where price moves swiftly towards a particular direction, leaving no retracement initially. This is called a fair value gap. Now, I can say that a fair value gap can occur in an area there is only a body of a candle that is being found. A body. Now, this is what I mean. I want to break down the things so that you can understand every single thing easily. So, wherever you see just a bottle of a candlestick without no wick in a price area, no, okay, something like this. I can say something like this. Mm, I have some. If I have something like this, if I have something like this, um, price is moving upwards. Price is moving upwards. These are all candlesticks. You get candlesticks. These are all candlesticks. These are all candlesticks. Now, okay, think let me just draw one. I want to show you what I want to show you what a fair value gap really looks like. Now, this area is empty. This particular area here is empty. There is no wick here. There is no other candlestick body. It's just an empty place. This place is called a fair value gap. Price is likely, since it's an uptrend I'm drawing, like price is likely to retrace from here. Price is likely to retrace from here down here and go back up. That is what a fair value gap is. So this empty place, this empty position, this empty area, this empty price zone is called a fair value gap, just a body of a candle and nothing else. So if I go over to the chart, how do I indicate it? We have a lot of fair value gaps here. Like this is the AS30 market. I have something of this nature here. I have something of this. This is a fair value gap here. This is a fair value gap here. This is a fair value gap here. Mm, where else? This is a small fair value gap here. This is a fair value gap here. Now, this fair value gap acts as support and resistance. Prices will definitely return back to a fair value gap level, and if it closes below the FVG, it traces if it closes above the FVG. That is a change of trend. So now, using this fair value gap now as an example, is one of the smallest fair value gap in this zone, and you can see how it played out carefully. Now it acted as a support and resistance for this zone. One thing about fair value gap is that fair value gap most most times corresponds with other blocks. So if you draw out your fair value gap, you discover that it's the same level as a other block. and most times it also produces the same thing a Fibonacci will also give to you. So this is a fair value gap. This is another block. This is another block. Assuming I want to draw a Fibonacci tool now, and this is the last trend, so I want where price will retrace in this level. I can draw something here, and so this is a 78% position. You can see how it goes. So a fair value gap is that very expository. It tells you a lot. So this is a fair value gap. Now the price closed below the fair value gap. Now if you price close below this fair value gap I've drawn out here, if price goes close above, if price close below this line, the top of the fair value gap, it means that it is a reversal signal. If price close above the fair value gap, it means we are going to be having a, it means that we are going to be having a change of trend, meaning price will be pulling upwards. Now you can be asking, why didn't price retest? Why didn't price rejected? Or why didn't price go back to the downtrend after rejecting the free value gap? This is a new scandal. I was following the trade throughout this day. This is a new scandal, a CPI. So normally, as you know, news does not respect your analysis. So this is a CPI, and you know it's dropping back down. So that is what a fair value gap does. Also try and make practicing others. So moving on, it acts as a support and resistance zone. As you can see there, it forms support. And watch now, price is reversing from this zone. Price is reversing from this zone. If price reach any of this fair value gap, I will take this as the most valid fair value gap to look out for, because there is another block here. So this is the most valid fair value gap we're looking out for. And that is what I'm looking out for now. So I'm expecting price to reverse from here, the most valid fair value gap. Now, if you have 2 or 3 fair value gaps in one trend, what you do is that you look out for the fair value gap that correspond with another block or a strong zone. So if I have 3 fair value gaps, I would like to trade the one that goes with the other block. If it reaches, there are sometimes it doesn't get to the other block. Price can be as that. Sometimes it can take so much time before it reaches the other block. That's what you should know. So we have we have other blocks now. Now other blocks have 3 things in place. We have, it has a neck. Okay, it's the neck of a swing. That is what I really mean. This is the head. This is the head. This is the head. We have double tops, and you know in double tops we take it as head, soldier, and hair. So now this is the head of the swing. Now I'm saying that the neck, something like this is another block. S- Places like these are other blocks where you look out for reversal. Places like these are other blocks. In simple terms, another block is the neckline of a start of a trend. The neckline of a start of a trend is the neckline of a start of a trend. So we have something like price is going to be trending downwards and it's just resuming after an uptrend, and it was ranging before it finally came down. Now this here, beginning from here to here, is an order block. It's an order block. This is where orders were taken, and This is a valid position where price will surely get back to this point before reversing downwards. So I'm actually looking at here. If I want to make any trade, I'll be looking at this order block. So this is basically what order blocks look like. If I want to trade, if I want maybe I missed the breakout and I want to enter a trend. Don't forget that as price is dropping, it's not just dropping like this, it's always ranging. It's always ranging. But it's likely to make a big move and get back to the other block before dropping down. This is my chart. This is another block. This is another block. So price drop, drop, drop. Price is reversing back upwards. If I want to place my trade, I can place my trade here and place my TP just here before the other block. And definitely it's always going to hit. For this scenario, it hit past it, went further, and it's going to be dropping soon. That is how you, that is what really an order blocks look like. So we have price retrace is to this level during a trend, a support and a resistance zone for corrections. Also, correction also have other blocks. Corrections, corrections also have other blocks. You look at it. Okay, this is what I mean. This is a correction. Price reached here, not fully the other block. Price retraced, come back. Now I can draw this as another block. After seeing this particular bearish candle, I will be definitely waiting for price to get to the other block of the correction before taking a trade again. And so price got to the other block, and here am I'm taking another trade. So that is how it works. So most corrections have other blocks. So if you want to enter a trade from a corrections, most with the valid after a correction you want to enter a trade, the valid place to always look out for entry points is always an order block in the absence of fair value gaps. In the absence of fair value gaps. And you can see fair value gaps are also very, very useful. So we have accumulation, manipulation, and distribution. Now, in accumulation, manipulation, and distribution, price accumulates first. After price accumulates, the next thing price does is it manipulates. Manipulation entails that it makes a fake move to sweep out all the stop loss, potential stop loss positions. Those are mostly market manipulations made by the big banks. So what do you do in that case? In a case where you see a in a in a case where you see a consolidation, you make sure that you wait for a manipulation. Now, I have it that this is a downtrend. I have it that this is a downtrend, and I'm seeing a manipulation here. This is a manipulation. Oh, this is accumulation. Price is accumulating. It's making no big moves. Yeah. Now I'm seeing an upward movement, a bullish movement upwards. I'm seeing a bullish upward movement. My analysis says downward trend. I'm seeing an upward movement. In this scenario, what I'll likely do is that I'll either wait or I trade with a very low risk, because some people will not have patience to do that. But what I'll advise you is that for safety's sake, anytime you're entering a trade outside your analysis, use a very low risk. If possible, divide your risk by 5, your initial risk by 5. It's going to help you, because sometimes we hardly resist the temptation to trade. So one of the ways to even control it is by reducing your risk. So if you reduce your risk, you stand a chance of losing small if you lose. That's not your analysis, so you shouldn't be expecting much from it. So now I've seen the bullish signal upwards, and obviously it didn't work out. Same thing here, the first day, second day. Then there was a breakout to the downside. A lot of people might have entered the trade from here at the close of this candle, thinking it's going to be bullish. Thinking it is going to be bullish. And most stop losses might have been on this zone. On this zone. That is why most times a wider stop loss helps. But a wider stop loss is not a solution to profitability in trading, because you might be having a wide stop loss in a wrong trend. Understand? You might be having a wide stop loss in a wrong trend. So depending on what you're doing. So just understand what you're doing, and your convictions must be strong. So the first thing we have here is AM, is an accumulation and a manipulation, and the next thing we are having here is a big distribution. Same thing happen here. Same thing happen here. A manipulation. This bullish candle, this bearish candle was a manipulation. I'm sure a lot of people entered trades at the sign of this, at the appearance of this candle. That's why most times it's good to always make entries from your lower time frames. Because if you make entries from your lower time frames, it means that if you make entries from your lower time frames, it means that you'll be alert to see most of what will happen next. Like in this scenario, if you go down to the lower time frame, you discover that there was no signal to indicate that price will be going downwards. So if you actually had an exercise patience for price to give you a bearish signal before entering the sell trade, you discover that there was no signal, and probably you would have seen a strong bullish signal to trade with. So that's all for AMD, and there are simple tips that you don't really need too much to trade. You only need much concentrations on what you're doing. Price is manipulative. So this is what happened. This is what AMD looks like. Accumulate, manipulate, distribute. So anywhere you see a anywhere you see a manipulate a consolidation, a ranging market, what you should look out for is a fake out against the initial trend, direction or initial trend. Once you get it, you can now start. Once you get it, you can now start thinking of going towards your main direction. So anytime you see a consolidated market, the first thing to watch out for is a manipulative move. If you don't see a manipulative move, you shouldn't be entering the trade, because it could be very risky. And if you should enter the trade, if there is no manipulative move, you should be careful, because most of the times consolidation comes with manipulation. So that's all for this class. Remember your fair value gaps, they are very important level. I explain it in a layman's language, and I hopefully believe that you understand what I'm trying to say by fair value gap level. Don't forget to like, share, and also send in your questions. I'm always ready and willing to answer at all times. Thank you so much. I appreciate your time.